Is your money truly safe in the bank? You might be surprised to learn the truth behind why your money may not be as protected as you think it is. Hello, and welcome to today's video, where we will be discussing a topic that may surprise you. Many people assume that the money they deposit into their bank account is safe and protected, but the truth is that this is not always the case. In fact, there are several reasons why your money may not be as safe as you think it is when it's sitting in the bank. In this video, we will be discussing some of the reasons why your money is not protected in the banks. Reason 1. Banks can fail. The possibility of a bank failure is one of the main reasons why your money may not be fully protected in banks. Banks can fail due to a variety of reasons, such as mismanagement, fraud, or economic downturns. If a bank fails, the money that you have deposited may be at risk, as the bank may not be able to repay all of its depositors. While many countries have deposit insurance schemes in place to protect depositors, these schemes have limits, which means that only a portion of your money may be protected. It's therefore important to spread your money across different banks and accounts, rather than keeping all of your savings in one place. Additionally, it's important to regularly check the financial health of the banks where you have accounts to make sure that they're in good standing and not at risk of failure. Reason 2. Bankruptcy proceedings can take a long time. If a bank fails, it may take a long time for depositors to receive their money back through bankruptcy proceedings. During this time, depositors may not have access to their money, which can be especially problematic if they need these funds urgently. Bankruptcy proceedings can be slow and complex processes, as the bank's assets and liabilities must be carefully evaluated, and its creditors must be prioritized according to the laws of the country where the bank is located. This means that depositors may have to wait months or even years to receive their money back. While deposit insurance schemes may provide some protection during this time, there may still be a limit on how much money can be recovered, and depositors may not receive the full amount that they have deposited. It's therefore important to have other sources of funds available, such as an emergency fund or lines of credit, to help bridge the gap during bankruptcy proceedings. Reason 3. Banks can freeze your account. Another reason why your money may not be fully protected in banks is that your account may be frozen under certain circumstances. Banks have the right to freeze your account if they suspect fraudulent or illegal activity, or if they require to do so by law enforcement agencies or regulatory bodies. While this measure is intended to protect the bank and its customers from financial crime, it can also have serious consequences for its depositors who rely on their bank accounts to pay bills, make purchases, and receive payments. If your account is frozen, you may not be able to access your funds until the issue is resolved, which can take time and may require legal assistance. To minimize the risk of your account being frozen, it's important to use your account for legitimate purposes and to comply with all applicable laws and regulations. If you're concerned about the possibility of your account being frozen, you may want to consider keeping some of your funds in alternative forms of payment, such as cash or cryptocurrency. Reason 4. Banks can be hacked. Banks store sensitive information and handle large amounts of money, making them attractive targets for hackers. If a bank's cybersecurity is compromised, hackers may be able to gain access to customers' account information, passwords, and other personal data. This can put customers' money at risk, as hackers may be able to transfer funds out of their accounts or make unauthorized purchases. While banks have security measures in place to prevent cyber attacks, these measures are not foolproof, and there is always a risk of data breach. If a bank is hacked, it may take time for the bank to identify and address the breach, during which time customers' accounts may be vulnerable. To protect your money from being stolen in a cyber attack, it's important to use strong passwords and to avoid using public Wi-Fi when accessing your bank account. It's also a good idea to monitor your account regularly for suspicious activity and to report any unauthorized transactions to your bank immediately. Reason 5. Banks can charge fees and penalties. Banks may charge fees and penalties for a variety of reasons, such as overdraft fees, account maintenance, and ATM usage. While these fees and penalties may seem small, they can add up over time and eat into your savings. Additionally, some fees and penalties may be unexpected or hidden, making it difficult for customers to budget effectively. For example, if you overdraw your account, you may be charged an overdraft fee, which can be as high as $35 per transaction in some cases. Similarly, if you use an out-of-network ATM, you may be charged a fee by both your bank and the ATM operator. To avoid these fees and penalties, it's important to read the terms and conditions of your account carefully and to choose a bank that offers low fees and penalties. You may also want to consider setting up alerts to notify when your balance is low or when you're in danger of incurring a fee. Finally, it's important to keep track of your transactions and to balance your account regularly to avoid overdrawing your account and incurring fees. Reason 6. Currency fluctuations. Another reason why your money may not be fully protected in banks is that currency fluctuations can affect the value of your deposits. If you have a savings account or a fixed deposit in a foreign currency, the value of your deposit may change depending on the exchange rate between the two currencies. For example, if you have a fixed deposit in US dollars and the value of the US dollar decreases relative to your home currency, you may receive fewer funds when you go to withdraw your deposit. Similarly, if you have a savings account in a foreign currency and you need to convert the funds back to your home currency, you may receive fewer funds due to fluctuations in the exchange rate. While currency fluctuations are a normal part of the global economy, they can have a significant impact on the value of your savings. To minimize the risk of currency fluctuations, you may want to consider keeping some of your savings in your home currency or in a currency that is stable and widely used, such as the US dollar or the euro. Reason 7. Inflation. Lastly, inflation can also erode the value of your money over time. If the rate of inflation is higher than the interest rate you're earning on your bank account, the real value of your money will decrease over time. This means that while your money may be safe in the bank, it may not be growing fast enough to keep up with the rising cost of living. To protect your money from inflation, it may be necessary to invest in assets that have a higher rate of return, such as stocks, bonds, or real estate. So, there you have it, 7 reasons why your money may not be as protected as you think it is in the bank. While banks provide a valuable service, it's important to be aware of the potential risks and take steps to protect your finances. By diversifying your savings and investments, monitoring your account for suspicious activity, and choosing a bank with low fees and penalties, you can minimize the risks and help ensure the safety of your funds. If you found this video helpful, be sure to give it a thumbs up and subscribe to our channel for more informative content. And if you have any additional tips or insights how to protect your money in the bank, please share them in the comment section below. As always, thanks for watching, and we'll see you in the next video.